Hello and welcome back. Well, I'm getting a lot of questions because we're seeing some changes in the marketplace again. Things are very volatile and moving along. So the question I keep getting asked a lot is, will these rise in interest rates kind of derail or affect negatively the home market and the real estate market at this point? And what we're seeing is, yeah, there's been a huge increase in rates. I had a lender just quote me today for this video. A month ago, a 30-year fixed rate loan you can get for 3.5%. Today that's 4.625. So what does that mean? That's an increase of virtually 1%. So if you got a loan for $400,000 in the town, anywhere here for $400,000, your payment would go up from basically $1,796 a month to $2,056. So that's in 1 month an increase of 15% on your monthly payment. So yeah, that's going to slow people down a little bit, I think, but more importantly what we're seeing is in the last year the prices have come up and now the rates have gone up, so our affordability has dropped down, so fewer people can afford a home. So what does that do? Well, it takes some of our new buyers, our entry-level buyers, it takes them out of the market. For example, I looked up 1 year ago today versus today. If I get a $500,000 house, I get a $400,000 mortgage. Well, this May, 2013, there was a house on El Capitan, nice street over off Tank Farm, 3 bedrooms, 2 baths, 1,345 square feet, sold for $510,000. A year ago May, there was a 4-bedroom, 2-bath on Ironbark, same area, 3-car garage, 1,700 plus square feet, sold for that exact same price. So not only is your dollar buying you less, your payments are higher, so that is going to slow down the market without a doubt. In fact, I'm seeing where we had multiple offers, a lot of buyers now stepping back. So it's going to slow down the market. However, I will gloat a little bit because if you look back in these video blogs and you click on May 27, 2011, I said why this is an amazing time to buy because you can get rates as low as 5% and even 4.625. So back then, it was an amazing time to buy and there were 3 times as many homes for sale. So we still have few homes for sale and we have the biggest seller nationwide is gone. That biggest seller is all the banks, all the REOs. Those are virtually disappeared. We didn't have as many here. So what does that tell me? We're not going to have the steep price increases. Okay, next 6 to 12 months, we're still going to have price increases. It's going to go up. It's not going to go up at the same pace where somebody in 1 year makes over $100,000. That is simply not sustainable. Will it continue to increase? I believe so. Will rates continue to inch up? Probably, but I think they'll back down. So they'll hover around 4.5%, 5%. They may spike up a little bit, but I could see a gradual increase. But because the inventory is still low, because people now have more equity in their homes, we're starting to see fewer of these buyers that came in and took away all the inventory, those buyers being first-time buyers who didn't have to sell, and investors who were getting in on the low rates and the super low prices. Those buyers are going to dwindle, and we're seeing more people like we have used to deal with 10, 12, 15 years ago who are either selling a larger house and getting something smaller or getting something smaller and moving up to a larger home. We're seeing both of those. So it's more of a normal market, a market that I prefer. It's not just racing up. We're going to see gradual increases, and I think we'll still see a very solid, predictable market, which will be helpful for buyers not having to be so panicky, and maybe some sellers now who've got a little bit overconfident may have to adjust their expectations. But the good news is if you buy in this market, you sell in this market, it's kind of a wash. So overall, not as going to be as much of an increase. We'll still have an increase, and I think next 6 to 12 months, as far as I can see, just kind of a steady climb. After that, who knows what's going to happen. But anyway, I hope that helps you out. I get that question a lot, and if you have any other specific questions, call me anytime, 805-781-3750. Thanks for stopping in.